Sorry. Okay. So this what we have discussed yesterday. So yesterday we do the substantive procedure. Okay, on the test count. Test count where when you test, when you observe the inventory count done by the management, then you might take a sample. So this is the result what the auditor recorded. So this is the extract from the inventory count sheets. Okay, then you record the quantity as per record, so mean as the count sheet and the quantity counted. So you identify the differences. So these differences need to investigate. Okay, so why you need to why there is a differences between the quantity per inventory sheet and quantity counted as what you done during your observation, okay, during the test count. Okay, same goes to the item DYL 261567L. So this also have a difference about 1 unit only, but you still need to identify. Okay, even though the amount is not material, because okay, today we want to look at whether this total, okay, today we are going to look at the total of the inventory, okay, is recorded at a correct valuation. Okay, so that is done. Okay, for the just to recall back, okay, on today's objective. Okay, actually today's objective, so this is slide number 22. Go to slide number 1 back. Okay, so today actually we are going to cover this one. Okay, explain the substantive procedures, okay, to meet the specific objective for the audit of inventory. Substantive procedures to meet the specific objective. So objective here, okay, normally refer to the assertion. Okay. So I hope you still remember lah what the assertion you have done before. Okay, so we get back to assertion. Okay, so this is the audit objective for inventory and related financial assertion. Okay, this is just to recall back what you have done in audit evidence, okay, in previous chapter. Okay, so the assertions that you are going to achieve for the objective for the inventory of audit objective is the existence and occurrence of the item. So existence, okay, you will get this objective when you perform the test count. Okay, the observation during the test count. So you will know that the inventory is exist. Occurred, okay, actually occurred is for transaction. So that's why the audit objective relates to the purchase and sales, okay, of the inventory. And then for the completeness, normally we will look at whether the all the transaction is properly recorded, okay, or completely recorded, completely recorded. So that's why you look at to the purchase and sales item itself, because this is more related to the transaction, okay. Okay, and then inventory at year end. Okay, you must check that it's included in the financial position. So if it is included, and it must be recorded. So that is considered complete. So normally you will look at to the general ledger, okay, of the item. Okay, for the right and obligation, you have to look at whether the ownership, okay, of the inventory, okay, is the inventory is the right, okay, of the company, or the inventory still under obligation, so means that it's not yet paid. so it's still under, the company still owe the supplier, and the ownership of the assets, okay, maybe if the asset is held for the third party, okay, asset held on the third party's right, so that is not also the right of the company's asset, okay, in terms of the right and obligation. Accuracy, valuation and allocation. So this what we are going to look at today. Okay, we will look at whether the inventory recorded get at a correct value. Okay, accuracy of the amount recorded. Okay, correct valuation, so must follow IAS 2, and the correct allocation, okay, of the asset. So if the company purchase of the inventory should be recorded in inventory lah. So if the company purchase the non-current asset, it should be recorded under inventory. Okay, and then it should be followed the IS2, lower of cost and net realizable value. Then correct classification. Okay, so is inventory recorded at a proper account, means it same as what I said just now. If the purchase made for the inventory, so it should be recorded under inventory master file. And cut off, so this is what we are going to highlight today. Cut off, okay, valuation. Okay, cut off means all purchases and sales of inventories are recorded at a correct period. So what period you want to take as a cut off period to see whether the GRN and GDN, okay, is excluded or recorded. Okay, so that cut off period, so because you are going to determine whether the correct period, okay, is applied or not on the purchases and sales of inventories. And the correct presentation, inventory is properly classified in the account. So presentation, okay, of your inventory, so it should be included under transaction, statement of support, okay, statement of profit or loss, and statement of soft financial position. So this is under current asset. This is under cost of sales. Okay, cost of sales. So that is the correct proper classification of the inventory. So any question on the assertion? Ada soalan pula? Okay, class. Okay not, Amelia?
Okay.
Okay, okay, good. So, so we are focusing on test of costing, test of testing today. Test of cut off testing. Okay. So actually it's same as what you have in the book, cut off testing. So why actually the auditor perform the cut off? Any idea, class? Why do you think the auditor perform the cut off? Siapa? Christina? Christina? If you are the auditor, why you perform the cut off test? Christina?
Yes, madam.
Yeah. Why you need to perform the cut off testing for inventory? Tadi kan kita dah dengar kan assertion tadi, I explain why the auditor perform, what is the objective of the auditor perform the cut off test kat sini. So this one. Okay, why actually you auditor need to perform the cut off testing for inventory?
To determine that the transactions recorded are within the correct reporting period.
Okay, okay, thank you. To determine whether the transaction or whether the inventory, okay, inventory recorded transaction, okay, is recorded at a proper period. Okay, so you have to relate, so actually what is the proper period? What is the proper period? So the question there you have to ask, okay, what is the proper period? Okay, and the second question, okay, what is the test, okay, to be conducted? So auditor should test cut off by noting the serial number of GRN. Okay, so what is the GRN, class?
Good
Receive note.
Okay, good received notes. And GDN?
Good dispatch note.
Goods dispatch note. Okay, goods. Okay, so good received notes can happen, okay, for sales or for purchase, GRN.
Purchase.
Purchase. Okay, good. Okay, GDN?
Sale.
Okay, good. So purchase and sales. Okay, so do not mix up between GRN and GDN. So if the question, okay, sometimes you are given the case study purchase and inventory. Sometimes you are given the case study sales and inventory. So do not confuse about the GRN and GDN when you perform the cut-off test later. So what is the test? So this one is procedure, okay, of the test. So you must be careful in order for you to use or to execute what the documentation you want to use. So auditor should test cut off by noting the serial number of GRN and GDN received and dispatched just before and after the end of the financial year, and subsequently verify that they have been included in the correct period. So actually this is to avoid the management to manipulate the sales and purchase figure as well as the inventory figures. Okay, so we look at from the perspective of the auditor that we are now going to get a correct valuation, okay, of inventory. Okay, correct valuation of inventory. So that's why you perform the cut off. Okay, other than you want to determine the transaction is recorded at a proper period. So you are actually avoiding the situation that the company try to manipulate the sales figure or the purchase figure at the year. Okay. Okay. What next? Okay. What actually you are going to achieve cut-off testing allows the auditor to confirm the completeness, okay, and existence of inventory. So when you perform the cut-off testing, either you want to okay, besides, okay, you look at the transaction or inventory, okay, recorded at a proper period. Okay. Okay, at the same time, when you perform the cut-off test, also you will achieve, okay, the completeness objective. Okay, and also the existence objective. Okay, existence objective. So, go back to the assertion just now. Completeness means all purchases and sales are recorded. So you want to see that the inventory are completely recorded. Okay, the inventory which are incurred are completely recorded. Okay, and the inventory is exists. So you have to making sure that the essence of cut off, making sure transactions are recorded in the correct accounting period. So that is meaning of cut off. So the accrual principle states that transactions should be recorded when they are occur and not when the cash is received. So you have to be careful when the company should record their GRN and when they should not record the GDN. Okay. So when we are talking about the cut off, what you should look into the important point is the point of purchase and receipt of goods and services. Okay, the requisitioning of raw material, because when we talk about raw material, normally we use the word requisition. Okay, requisition of raw materials for production, transfer of completed WFP to finished good, and the sales and dispatch of finished good. And you have to utilize the word purchase invoice. Okay, this document is very important. Okay, when you perform your cut off, purchase invoices should be recorded as liabilities only. Okay, only if the goods were received prior to the inventory count. Okay, prior to the inventory count. So it should be recorded as liabilities. Okay, a schedule of goods received not invoice. Barang dah sampai tapi belum invoice. Good received not invoice should be prepaid and item on the list should be accrued for in the financial year. So means that to show that it is completely recorded, okay, the purchase invoice, okay, should be recognized as a liability, okay, if only if the goods were received prior to the inventory count. Okay, what does it mean? Okay. The accounting period up to 31st December X1. Okay. When you want to recognize the purchase invoice or when you see, okay, that the transaction is complete, okay, we are talking about cut off. So this is the cut off period. So cut off here, when you want to look at whether the company has completely recorded the purchase invoice. Okay. When you have to look at where or how to recognize that purchase invoice as a liability. So only if the goods were received prior to the inventory count. So if let's say the inventory count is done on 31st December, so dia terima barang di sini. Okay, so katalah on the 30th of December, okay, the goods received. The goods received. So you have to ask whether this good received, okay, should be recognized as a liability or not. Okay, should be recognized as a liability or not. So the recognition of the liability, okay, should be start here on 30th of December. So recognize it as a liability. Okay, why? Because the goods is according to the this one, accrual principle. The transaction should be recorded when they occur, not when the cash received. So it occurred already on 30th December. Okay, so even though the purchase invoice has not been received by the company, okay, what should the clerk do? The schedule of goods received not invoice should be prepared. Okay, are you clear, class? Clear or not? On how to recognize the liability.
Maksudnya, madam, dia recognize as liability sebab dia dapat barang tu sebelum dia Sekejap.
Nah, okay, sebelum apa, Shavina? Your
Sebelum
understanding.
dia kira,
Sebelum
31/12 tu kita kira kan.
kita kira count stock kat sini inventory count.
Kita tak nak kira dia sebab dia tak dapat invoice lagi. Betul.
Kita tak nak kira ke macam mana? Macam mana kami? Kita tak.
Madam ulang balik boleh.
Okay, so now the question is what? Because we are talking on the valuation of inventory kan? The correct value, okay, of inventory. So bila kita nak tengok the correct value of inventory ni, kita kena tengok juga in terms of dia whether the inventory has recorded at a proper period. So sekarang ni kita ambil jalan senang je, kita assume inventory count is done on 31st December. So inventory count done on 31st December, good received on 30th December. So sekarang ni if kita tengok the accrual principles, okay, yang ni dalam principles dalam financial reporting framework, you have the principles, accrued principles, where it states that the transaction should be recorded when they are occur. Okay, when they are occur and not when the cash is received. So on 30th December, okay, what are the transactions that occurred? Jamina, what are the transactions that occurred on 30th December kat sini?
Purchase
ataupun apa aktiviti dia? Goods received. Yes, goods received. That is the activity occurred to the company on that period. Okay, but goods received, but the good received maksudnya dia datang dengan good received not, right? Okay, the company already received the DRN, good G, sorry G. Sebut G, tulis D. Okay, so that's happened. Okay, G, good receive not. Okay, but have the invoice received? Have the purchase invoice received?
No.
Not yet. Okay, purchase invoice not yet received. Okay, so now you have to ask, okay, or you have to look at whether the company included or not this transaction in their current liability, accounts payable. So sebab apa you nak tengok, okay, bila I kata tadi, when you do the cut-off test, at the same time you will get the result of the completeness assertion. So nak tengok completeness ni, kita kena tengok record. So dalam record, dia masukkan tak as recognition of liability under accounts payable, and you have to check also to the general ledger under purchase. So maksudnya dalam purchase dia mesti masukkan amount ni. Katalah on 31st December the value of good received is 10,000. Okay, 10,000. So adakah 10,000 ni is already recorded in account payable, AAX, katalah 10,000 credit, and in the general ledger debit purchase 10,000. Okay, sebab the argument is GRN is received but purchase invoice not yet received. So kita ikut konsep accrual principle that the company must recorded this one. So it should be included in the inventory count. Katalah 10,000 ni, dia kena kira. So itu maksud dia, purchase cut off. So you take the cut off period is on 31st December. Itu cut off period yang you pilih. So untuk buat inventory count. Okay, boleh Syamina?
Boleh.
Madam,
Yes.
maksudnya kita ada 2 list ke?
2 list. Maksud list
Maksudnya list pertama purchase invoice yang memang kita dah dapat. Lepas tu second list goods received not invoice sebab kita nak recognize liability dia kan?
yes. Bila you tengok kepada dokumen, sebab itu tadi dia kata it must be noting the serial number. You kena tengok serial number of the GRN tadi. Okay, sebab itu this is come under TOC, test of control, serial number. So sebab kita tak nak the company does not recorded the transaction. So bila dia tengok GRN ni serial number dia 0, katalah 0 to 100. Okay, 0 to 100. Okay, then when you check to the purchase invoice, okay, that purchase invoice must refer to GRN 200. So all information dia mesti related to GRN 200. Boleh. Sebab itu dia kata based on serial number. Am I answering you? Siapa yang bertanya tu? I tak nampak dah. Amni, Amni
Okay, madam.
Okay, okay. So any more question? You must clear this one. So this is the concept of you want to see whether the transaction recorded at a proper period. So maksudnya on 30th of December ni dia kena record. Sebab benda tu dah berlaku. Sebab itu completeness is the transaction that has been occurred should be and included should be recorded. Dia berlaku dan kena record. That is completeness of the transaction. Tapi kalau cut off ni, kita buat test cut off ni untuk determine whether the transaction recorded at a proper period. Some company, they might manipulate this one. Sebab dia kata, oh okay, dia tak record pun GRN ni receive at this particular period. Sebab nanti dia ikut purchase invoice ni. Sebab dia tak nak maybe company to show too high accounts payable. That is what happened in the business. Okay, so itu yang berlaku dalam dalam company. They try to manipulate sales, try to manipulate sales and purchase because they want to highlight certain information and maybe they want to reduce their net profit, okay, to avoid the tax and so on. So that's a lot of things, okay, in the mind of the board of directors. Okay. Okay, not class. Dah boleh? Amni boleh? Syamina boleh? Can we proceed? Okay, thank you. So sales cut off is generally more straightforward. Sales straightforward to achieve correctly then purchase cut off. Invoices for good dispatch after the count should not be recognized as revenue for the current period. Okay, so invoice for dia terbalik dengan sales invoices for good dispatch after the count. So of course lah after the count kita tak akan recognize kalau dia berlaku kat sini. Okay, as revenue sebab company akan recognize as before or prior to the inventory count. It's clearly sebab good dispatch goods akan dikeluarkan daripada company. Okay, untuk dihantar ke customer after the counting. So that is regarding the sales cut off and purchase invoices. So this is the situation for the purchase cut off all purchases for which goods have been received before the year end must be included in the financial statement as liability, expenses and closing inventory. So this is what we discussed just now. And the good received after year end should not be included in the financial statement. So if the goods received after year end, so kalau dia berlaku katalah the goods has been ordered on 30th of December. Goods order, purchase order, okay, dia macam ni juga, purchase order. Okay, I put at another column. Yeah, another slide. Okay, insert. Okay, so if let's say, okay, so this is situation. Okay, if the goods is arrived here, okay, katalah dia arrive on 2nd of February X2. Okay, this one X1. So receive goods. Okay, so if, okay, the cut off point here, okay, but if let's say the stock taking, the stock count is done on 5th, okay, use color, red color. Okay, so if let's say this is the date of stock count. Stock count date is on 5th of January X2. So when the counting happen, okay, counting, so on stock on 5th of January. Okay. So the amount here received goods of 10,000. Okay, 10,000 lah. So when the clerk or the person in charge counting the stock, so do you think that they will included in the stock count? Awak rasa lah bila dia when the clerk counted the inventory, so do you think that they will include the goods the goods inside that inventory?
Yes.
Yes, right, yes. If they have not have a proper inventory control movement. So that's why masa kita belajar at the beginning tu semalam, so you have to look at that, is the company have a proper movement instruction. Okay, so if the company have a proper movement instruction, then the possibility to include that received goods, okay, at after year end, dia tak akan masukkan. So this is received goods after year end. Okay, after year end. So it should not included because the stock count ni, you nak kira stock count ni sebenarnya you nak kira inventory as at what date? Kalau you nak tengok company tu kira inventory as at what date?
Year end.
Year end. Kan? 31 December X1. So, kalau good received on 2nd of January X2, of course it should not be included. So that's why dia kata kat sini, okay, invoices, okay, generally more salah mana kita ni? Ni. Okay, good received after year end should not be included in the financial statement. So kalau kata dia masuk, okay, tak apalah. Okay, you observe on that stock count. Okay, then you identify the figure has been included. Okay, never mind. Okay, figure has been included. Okay, what should you do? Apa you sebagai auditor nak buat? Anyone? Fitri? What should you do, Fitri? If the figure is included in the stock count, what should you do? So now my question is the inventory over or understated? Inventory amount.
Over.
Okay, dah jadi overstated. Okay. So now you already determined that inventory is overstated. So what should you do next?
Tolak.
Kita tak boleh simply tolak. Okay, you are not the management. Okay, you are not the people who have access, or you are not the preparer of the account. Okay, remember you are the auditor. Okay, you don't have any right to make any adjustment to the account. Okay, you have a right to access all the information, but you don't have a right to access to manipulate or to adjust the company account. Okay, so what should you do next?
Reconcile itu.
You have first do the reconciliation. Sebab itu you kena prepare or re-perform reconciliation. After that, or you may ask you re-perform reconciliation, or you may ask the clerk to reconcile. Okay. So, next what should you do? Discuss with management. Ingat tak yang ni, yang kita belajar, investigate. So, bila you investigate, you kena inquire. So, that's what should you do, okay, regarding the accounts. Okay, any question? Understand? Boleh? Boleh ke tak boleh ni? Boleh. Okay, good. So, that is on purchase. Sama juga dengan revenue. Revenue cut off or sales cut off. Sales kita panggil sales lah. Sales cut off, revenue or sales for where the good have left the warehouse should be included within the revenue and trade receivable at year end, but not in the closing inventory. Macam mana tu? Anyone can explain? Revenue for where the good have left the warehouse should be included within the revenue and trade receivable at year end, but not in the closing inventories. So please, I draw the timeline. Okay. So when the revenue where good have left the should be included at year end. Okay. So when is the sales happen? Is it situation 1 or situation 2?
Situation 2.
Jamina said situation 2. Others? Ain Nizati? Ain, situation 1 or situation 2?
Saya rasa tu kot dia.
Two. Okay, revenue for where the goods have left the warehouse should be included within the revenue and trade receivable at year end but not in the closing inventory. So, okay, semua kata situation 2. Actually, situation 1. Okay, revenue for where the good have left the warehouse. So dia dah keluar. So this good dispatch note has been raised, okay, during this period. So dia kata left the warehouse. Dia dah left waktu you buat inventory count ni. Dia dah tak ada dah. Dia dah keluar. Okay, dia tu inventory lah. Inventory tu has going up, has been delivered to the customer. So if it has been delivered to the customer, should the company recognize them as a revenue and trade receivable? Should or should not?
Sure.
Yes or no?
Yes.
Yes. Okay, so yes lah sebab dah jual. So means that dia dah jual dah kat sini. So the company should recognize it as a revenue. So revenue dia dah jual. So even though katalah the GDN is already delivered, but yet the sales invoice, okay, the sales invoice not yet prepared or not yet sent to the customer. So according to accrual concept tadi, you still need to recognize. Okay, you still need to recognize. Tapi inventory tu dah tak ada. Okay, dah tak ada, dah keluar. So means that it should not be included in the closing inventory. So bila dalam record, so what is actually the confused part here? The confused part here is maybe you have to look at in the record and actual count. Okay, so if let's say that in the actual count, okay, yes, they don't have, okay, katalah dia already excluded. So already excluded. So dia letak actual count kat sini, katalah the total actual count tu 50k. But in the record, they do not recognize. So if they do not recognize, okay, dalam record ni, so maksudnya dia akan jadi understated. Okay, sebab dia bila dia ingat, okay, the company said the cash is not, the customer not yet paid them. So dia tak terima duit, so dia tak recognize that is a revenue. So that is wrong. So dia akan jadi understated. The sales the account receivable ni possibility akan jadi understated. Sebab dia tunggu invoice dapat, baru dia nak recognize. So that's happen in the business. That you have to look. That is a factor, okay, contributed to the actual count and the recording figure, okay, will be under or overstated. Okay, revenue made after year end must not be included in the financial statement but should be included in the closing inventory after year end. So kalau dia berlaku kat sini after year end, dia deliver. Okay, dia deliver after year end. Katalah it delivers on 2nd of January X2. Dia deliver. Good delivery note issued. So in the counting of inventory, this inventory should be included. Sebab inventory tu masih lagi ada kat dalam sistem. Sebab dia belum keluar lagi daripada warehouse. It's not taken out yet, or not yet delivered to the customer. So that's why dia kata revenue made after year end. So it's done after year end. So it should not recognize as a revenue, but it should be included in the closing inventory, because the amount, the inventory is in the warehouse. Even though your stock count, the company stock count happened on 5th of January X2. Sebab itu masa kita belajar the first 1 year semalam, the length of time from the year end to the actual count day will give factors to the reliability of the counting of inventory. Itu faktor-faktor yang you kena tengok lah when you perform the cut-off test. Okay, any question? Ada soalan tak? So this is the summary, of what you what we discussed just now. So this is year end, before and after. So this is situation 1 and this is situation 2, as I said just now. GRN, for the good received, for the purchase, included in purchases, yes. Payable, yes. Inventory, yes. So if the purchase happen before year end, so it should be included in purchases, in payable and in inventories. For the revenue pula, GDN, if it is situation happen before year end, it only included in revenue and receivable but not in inventories. So the other way round of the situation. If it happened after year end, so for the GRN, good receipt notes, is it included in the purchase? No. Payable? No. Inventories? No. For the good delivery notes, it should be included. Is the revenue is recognized? For the revenue, no. For the receivable, no. For the inventory, yes. So this is what we discussed just now, and this is the summary. Any question? Any question? Nak digest dulu Okay tak?
Okay.
Okay lah. So digest first lah, 5 minutes break. Kita break dulu. Okay, boleh break dulu ya. Senyap je. Dan break dulu kelas. Okay, class. Ready? Shall we proceed? Ready or not, guys? Ready. Semua
Ada.
okay. So, okay. Okay, so we proceed with the next one. Okay, when you actually we have discussed this one regarding the management point of view. Okay, what the management should do regarding the cut-off procedures for the management. Okay, the auditor should consider whether management and the audit client have implemented adequate cut-off procedures. So means that maybe the words that they are used is not cut off, but from the point of view of the auditor, okay, what is actually the cut off procedure means that you must look at whether the management has taken enough, okay, for the procedures for recording the transaction at a proper period. Okay, so the procedures implemented by management to ensure that movement into, within or out of the inventories are properly identified and reflected in the accounting period. So that's why, okay, when you want to rely on the internal control system of the company, okay, instead of you perform the TOC, also you must look at in terms of the flow chart of the company. Okay, or you can give them the internal control questionnaire. Okay, if you rely that the control procedures is good, then you perform the test of control. If not, then you have to be careful, okay, during your extent of audit procedures for inventory. So that's why guideline for the auditor, okay, you must look at in terms of the management instruction. Okay, management instruction, okay, of the inventory count. So how they control the movement. So that's why for the guideline under ISA, okay, ISA, they did mention okay, about no movement, okay, should be no movement should be implemented, okay, during the test count. So dia tak benarkan movement, but if there is a movement, then the management must have a proper procedure to do the reconciliation, to do the adjustment. So this one we have discussed on the how you have to consult regarding the purchase invoice and revenue cut off, okay, in terms from the management point of view. Yang ni lah tadi. So this one, okay, the management should take proper procedures on how when to recognize, okay, as a revenue and as a liability. Okay. So this what we talked just now. Management, okay, prior to the physical inventory count, management should make arrangement for cut-off to be properly applied. Appropriate system of recording of receipt and dispatch of goods are in place, and also system for documenting material requisition. Good receipt notes and good dispatch notes should be sequentially pre-numbered. So this what as an auditor also the point of concern, okay, for you, okay, this one, okay, importance of cut-off, point of purchase and resale of goods and service, requisitioning of raw material, transfer of work in progress, and the sales and dispatch of finished goods. So the same thing what you should highlight to the management. Final GRN and GDN and material requisition numbers are noted, and arrangement should be made to ensure the cut-off arrangement for inventories held by the third parties are satisfactory. There should ideally be no movement of inventories during the count. Okay, preferably receipt and dispatches should be suspended for the full period of the count, and it may be practicable to suspend all deliveries, in which case any deliveries which are received during the count should be segregated from other inventory and carefully documented. So this is what management should do. Okay, bukan auditor So auditor give recommendation if they have no proper procedures for the movement of inventory. So this is what you should look into the management procedures on the movement of inventory. So what happens if the cut-off is not correctly observed? So then it is possible that the item may be missed, understated, double counted, resulting a misstatement of inventory. Okay, when you want to apply this situation, so this situation, okay, you might be apply it when you answer the question for the case study. Okay, where you have to think on the implication. Okay, implication of the situation. Okay, so this is the time you want to include the terms or the things that might be happen. Okay, if the cut off is not properly observed or the inventory count is not properly done by the management. So the item might be, the inventory figure might be understated or double or overstated. Okay. Okay, next. So these are all the example of audit procedures on the cut-off. Okay, so in order to determine the audit procedures, again, you have to use the procedures. This is the verb. Okay, correct cut-off procedure. These are the activities or the evidence you want to gather. Okay, correct cut-off procedures are being followed in the dispatch and receiving areas. Okay, to verify. Okay, the transaction, okay, recorded at a proper period. Okay, so that's how you write your audit procedure. Okay, discuss procedures with company staff performing the count to ensure they are understood. So this is also the procedures for cut-off. Okay. So that is at the count. Okay, at the count cut-off procedures. Okay, during the final audit, okay, the auditor will use the cut-off information from the count to perform the following test. So when you do the cut-off procedure at the final audit, okay, during the substantive test procedure, okay. During the substantive test procedure, so you have to look at the different procedures here. Okay, so kalau yang the first one at the count tu, so you normally use the control activities, okay, as the objective, but for the final audit, okay, normally you have to look at to the detail. Okay, details of the inventory. So match up, okay, the goods received notes. So you use the goods received notes, GRN, with purchase invoice. You jangan buat mistake kat situ. So match up, okay, match up the goods received notes with purchase invoice and ensure the liability has been recorded in the correct period. So this is the difference between procedure 1 and procedure 2. Procedure 2 here normally go to the details of item. Sebab itu yang ni during the final audit, the cut off procedures ni is determine the completeness of the transaction. Okay, so match up the good received note with the purchase invoice and ensure the liability has been recorded in the correct period. Match up the good dispatch note to sales invoice and ensure the income or revenue has been recorded in the correct period. Match up the requisition note, requisition for raw material to the work in progress. Okay, work in progress figures for receiving department to ensure correctly recorded. So this is the difference between procedures 1 and procedures 2 at the period. Okay, look at to the period at the count and during the final audit. Okay, any question? You nampak macam mana buat procedures? Can you see? So this is the verb. This is the documentation evidence. Okay, you want to perform. Okay, so this is the noun. And this is the objective. Okay, objective must relate with the assertion. So this is to satisfy the cut off objective. Yes, any question class? Ada masalah tak? Understand? No, okay. So no, so this is the case study. Okay, can you have about 3 minutes to read? Okay, quickly read the case study for Brown and Co. No, Anam, you are the class. Objective. Okay. Okay, done class? Done reading the case? Done. So sama kan as what we discussed just now. Ini? Ah, okay. So see the clear picture of how the final audit. And so ini berlaku on the final audit. Okay. So this is the question that you have in the book. So just to quickly look at how to answer. Okay, what was, yes, Mimi, any question?
Yang kita study tadi tu kan,
This
saya
one.
ada soalan.
Okay, ada
Sebab
soalan.
kan inventory count tu kan kena match dengan purchase invoice.
Yes.
Tapi tadi tu kalau kita good receive tapi not invoice, so tak ada purchase invoice. Maksudnya inventory tu still kena kira.
Yes.
Inventory yang kita kira tu nak match dengan apa?
Inventory yang kita kira tu match dengan apa?
Kalau kita tak
GDN? GRN?
Oh, so sekejap. Walaupun kalau dia tak ada purchase invoice, kita match dengan GRN.
GRN.
Okay.
Sebab itu bila barang hantar selalunya dia come together with the GRN, kan? Of course dia mesti ada GRN. Dia tak macam kita kalau kita receive yang order, kalau kita beli daripada Shopee pun dia akan ambil kita punya receive kan. Macam dia notify kan. Kita punya kita dah receive goods tu, tapi kita itu yang cash basis lah. Tapi kalau credit basis, normally goods received dia come together with the GRN.
Okay.
Boleh ini.
Faham.
Okay. So any more question class? Ada lagi soalan? So if no, then next look at to the question, what procedure should auditors undertake to ensure inventory cut-off has operated correctly. So this is what the auditor ensures, the management lah, instruction, cover, cut-off arrangement. So this is talking about the instruction tadi. So receive, dispatch and material requisition should be recorded by pre-numbered documentation or sequentially numbered. So yang ni as what you have in the book tadi lah. Final number of goods received, dispatch and requisition should be noted. Cut-off arrangement with the third party should be satisfactory. So these are what should auditor ensure, okay, with the management. At the inventory count, so at the inventory count, auditor should carry out the following procedure. So I think this one what you have done tadi. Okay, and after inventory count, okay, after the inventory count, so you have to match up. Auditor should carry out the following procedure. So this is a detailed test on the cut-off. So as what we discussed just now. Okay. So now we go to the do not look at to the number. Do not look at to the number. So accounting for valuation of inventory. So kita pergi kalau in the books number 5 lah. Okay, the last part on the inventory valuation. So inventory valuation, you have to take into consideration the allocation of cost and NRV. Okay, so yang kat sini kita akan apply application of IS2 where you have to compare the cost and the NRV, and also you have to look at what are the costs costs attributable to or what are the total costs, okay, which relate to the inventory, and you compare with the sales price. So this is only repeating. Cost is defined by IS2 as comprising all costs of purchase and other costs incurred in bringing inventory to its present location and condition. So this you must understand lah. Okay, you must remember the meaning of cost and the meaning of NRV. So how you are going to look at in terms of the auditing on the inventory valuation. So auditing for the inventory, okay, you have to ensure the methods of determining cost and the allocation of overheads is appropriate. Methods of determining cost and allocation of overhead is appropriate. And you need to ensure on confirming inventory is carried at a lower of cost and NRV. So you have to know the procedure to compare. So this one you have done in FFA. Okay, but from the auditor's point of view, you have to confirm whether the inventory is stated at a lower of cost and NRV. So there are several ways of determining costs. So auditor must ensure that the company is applying the method consistently, and each year the method used give a fair approximation to cost, and it may need to support this by additional procedures. So the method is FIFO or average cost method. Average, ABCO. Okay, average cost. So these are the two methods allowed, and when the management apply this method, it must be applied consistently. Okay, if they want to change the method, they must have support with the disclosure. So that is the requirement under IAS. Okay, for the auditor, you may need additional procedures where you need to review price changes near the year end and aging the inventory, aging inventory, and reconcile gross profit margin to reliable management account. So this is quite complicated lah. So that's why inventory is the most difficult part for the auditor. Okay, they have to look at in terms of cost, whereby sometimes the company might the cost of the product might be changed every month. And then valuation of raw materials and brought in component. Auditor should confirm that the correct price has been used. Correct prices has been used to value raw material and brought in components valued at actual cost by referring to the supplier's invoice. The valuation may include unrealized profit if inventory is valued at the latest invoice price. So invoice price will also, because invoice price, especially from the supplier, as long as the product is not a controlled product by the government, so the chances of the fluctuating of invoice is higher. Fluctuate in invoice. So maybe this month different unit price, next month different unit price. Reference to supplier's invoice will also provide the auditor with assurance as regard of the ownership. So when you look at to the supplier's invoice, other than you look at to the price, unit price, you can also look at to the ownership. If standard costs are used, standard costing, and dalam costing belajar standard cost, auditor should review the basis of the standard, compare standard cost with the actual cost, and confirm that variants are being treated appropriately. Okay, so that's you gather your knowledge in the costing, also bring it in audit. Okay, so this is what Joe Price do. Okay, can you have a rate about 2 minutes or 1 minute? 2 minutes. Okay, what Joe Price do in valuation of inventory regarding the raw materials? Okay, done class? Is it understand on the case study what Joe Price do for the raw material? Okay, the most important documents here is supplier's invoice, relevant to the supplier's invoice for the raw material. And then they took a sample for the work in progress and finished good and test both the cost of this good and the NRV, compare the two values to ensure that the goods are valued at a lower of cost and the NRV. Okay, shall we proceed, class? Shall we proceed?
Yes, madam.
Okay, thank you. Senyap aja, so I thought you still digesting the case study. Okay, so this is for variation work in progress and finished good. So other than long-term contract work in progress, long-term contract work in progress is for the manufacturing company. Okay, so this is for the construction company. So this is focused more on the manufacturing company. Cost comprises the cost of purchase plus the cost of conversion, and cost of conversion comprise of cost specifically attributable to units of production. Yang ni dah belajar dalam costing kan? Okay, production overhead and other costs attributable to bringing the product or service to present location and condition. Betul kan? Dah belajar dekat costing ke dekat FA? Emilia? Kat mana belajar Emilia? FA. You use your knowledge for in audit. So this is what Joe Price do regarding the work in progress and finished good. So taking into account the cost specifically attributable to unit of production. So which one is the direct cost, indirect cost? Okay. So cost of production is for direct and indirect cost. And you have the prime cost. Okay, remember you are the prime cost. Okay, this you will use the direct cost. And you have the indirect cost. Okay, on top of that, you have production overhead and you have other overhead. In order for you to get the total cost of production. Okay, when the company arrive this figure, so you have to look at in terms of the cost attributable to unit production, production overhead and other overhead. So this is what Joe Price do. Okay, can you read about 3 minutes for the Joe Price? Okay, done class? Is it done? Any question for the case study? Any question? So, or you not yet finished reading? Ani? Are you okay, Ani?
Okay, madam.
Okay. Any question for the case study? Understood or not?
Understood.
Okay, good. So, here they perform the audit procedure plus one of the substantive test kat sini. Okay, so she will again compare this year's calculation to the last year's to ensure that it appear reasonable. So this is the example of substantive test applied during the, substantive test pula. Apa ni kelas? What is this procedure? You compare the year's calculation to the last year. This is what? What procedure?
Analytical procedure.
Yeah, good. Analytical procedure. So this is the example of where you think that analytical procedure is possible, okay, to conduct when you do the substantive test. So this is the analytical procedure during the substantive test where it is not compulsory by the IAS. Okay, by the ISA, by the ISA. Sebab dah terbalik tadi tu IAS. Okay. So this is what the auditor do. Okay, the auditor do for cost of inventory. So how they record, okay, regarding the information tadi tu, cost specifically attributable to unit of production, production overhead and other overhead. So this is extracted, okay, for the cost of inventory. So this is the quantity given. So for the code of the item. So raw material cost, okay, this is in unit. This is in the value. So labor cost, material cost and overhead. The total cost is 7158 in dollar and total cost per unit is 7 per dollar. So you have recorded, okay, what you have identified tadi from your raw material requisition invoice, okay, so you will get all this one. And this the audit procedure you would be performed on the full breakdown of the cost of finished inventory when auditing the valuation of inventory. Document the reason for each procedure. Okay, document the reason. Okay, so just look at what is the answer. Okay, you can recalculate. So recalculate is one of the procedures. Recalculate the total of the breakdown to ensure it has been calculated correctly. So this is nak tengok the correct valuation tadi. Sebab you are looking for the correct valuation of the cost item, okay, of the inventory. Okay, ingat kita sekarang ni sedang tengok cost. So we want to look at whether the cost stated is at a correct valuation. Cost versus NRV. So this is the cost. Recalculate the total of breakdown to ensure it has been calculated correctly. Agree the total of breakdown to finished goods, okay, figure to the trial balance and the financial statement to ensure the accuracy, completeness and existence of the figure in the financial statement. For a sample of inventory code, you take a sample, okay, of inventory code, okay, agree the cost of raw material. So agree the cost of raw material ni, okay, the cost of material to purchase invoice. Okay, to ensure that valuation of raw material cost is accurate, your objective. Okay, this is your verb, agree. Okay, this is your noun and this is your objective. So the document that you are use is the noun. Okay, the document, purchase invoice. Okay, for a sample of inventory code, okay, again, so you nak tengok pula tadi cost of raw material, you compare with the purchase note. Sekarang ni, labor cost to underlying documentation such as timesheet to ensure the valuation of labor cost is accurate. So where is the evidence? Okay, you take from the raw material, so the evidence is invoice. The evidence is timesheet. Okay, so you have to know where is the sources of evidence. Okay, in order for you to build up your procedures. So this is the evidence that you want to use, timesheet, to ensure valuation of labor cost is accurate. Next, you can inquire management as to basis of the overhead calculation. Sebab overhead ni normally kita tak ada document. Okay, so you must inquire management. What are the basis for the overhead calculation? And compare this to the previous years in order to assess reasonableness of the calculation. So this is your evidence, your sources of evidence. You must inquire the management. So this is your verb, inquire management as the basis. So look at to the discussion with the previous years reasonableness of calculation. And for a sample of inventory code, agree, you want to check the overhead cost. So overhead cost again, to supporting documentation such as invoices for electricity, electricity bill. Okay, ensure that any overhead costs included are attributable to the production. So look at to the electricity bill. So which one goes to the production and which one goes to the office. So you will look at to the apportionment of the bill. So that's how the cost of the audit procedure for the cost of inventory. So you kena tahulah cost ni ada 3 lah. So satu direct cost, prime cost, satu overhead, satu other overhead. Okay. Any question? Senang kan? You can see the example here. Boleh nampak tak? I dah bagi direct example ni. Boleh tak kelas?
Boleh.
Okay. Seronok tak ni nak jadi auditor ni? Amni? Nak jadi auditor tak?
Tapi tak nak
Apanya Amni? Apa, kenapa? Tak nak jadi auditor?
Nak jadi auditor tapi tak nak answer.
Tak nak jadi auditor ya? Oh. Apanya? Oh, tak nak exam? Mana boleh tak nak exam?
Sama madam.
Jadi auditor sebab senior you dah ramai jadi auditor dah. Yang baru ni latest saya dapat berita 2 hari lepas dia mesej saya. Dia kata, "Madam, saya dah dapat jadi auditor dekat EY." Seronok saya. Okay, so you punya senior dah ada 2 orang dekat EY KL after SCCA. Okay. So I nak you all nanti lepas 2 tahun, 2 tahun setengah ni, 3 tahun lah. Biasa saya balik, madam saya dah dapat jadi auditor. Macam tu. Okay.
InsyaAllah madam.
Okay, kena tanam niat pada sekarang. Nak jadi auditor kat mana? Kena letak tempat dia. Okay, so that is done on the cost, audit of cost. Now kita tengok cost versus NRV pula. Okay, so yang ni tak payah lagi lah. So now look at to the NRV. Auditor should compare cost and NRV value for each item of inventory where this is impracticable. The comparison may done by the group or category. NRV is likely to be less than cost when? So when is the NRV is less than cost? So I think in this situation, in the current situation, in the COVID situation now, majority company have NRV less than cost. So when an increase in cost or fall in selling price, so this is normally happen now where the NRV, the selling price is less than cost. So kalau ikut IAS tu tak boleh. IAS said you should compare. Okay, you should compare which one is the lower. Okay, lower of cost and NRV. Okay, selalu NRV akan higher than cost kan? Betul tak? Agree tak? Do you agree class?
Kadang-kadang.
Kadang-kadang. So most of the time lah Syabina. NRV ni cost selalu rendah lah daripada NRV sebab cost kan. NRV ni selling price. Cost. So selalu normally company akan record all the figure at cost. But where is situation? Sometimes the company need to record the NRV because NRV is lower. The selling price is lower than the cost. So this is situation given. Increase in cost or fall in selling price, physical deterioration of asset of the inventory, of the inventory. So dia dah ada cacat sikit, then they will sell lower than cost. Obsolescence of the product, okay, obsolescence, the susut nilai dia, okay, hakisan dia and so on. Marketing decision to manufacture and sell product at a loss. So dia memang nak bagi sedekah, so sell at a loss. Okay, error in production or purchasing. So that is situation. So how you are going to perform the audit test? So when you want to perform the audit test for cost versus NRV, so you have to review and test the client system for identifying slow moving item, obsolete item or damaged item of inventory to determine its effectiveness in identifying item which may need to be written down to net realizable value. So sometimes when you go to the supermarket, you dah lama tak pergi supermarket kan? So you will see one corner that they put the marketing strategy lah kot, the right markdown item. Okay, markdown item. So dia kata harga kurang daripada cost, dia kata. Harga kurang daripada cost. So that is the NRV low than cost. So what should you do is you perform the test. So what are the tests? You test the client system for how they identify the slow moving, obsolete and damaged inventory. And then you need to follow up any such item that you identify at the inventory count. So observe how they deal with this slow moving, obsolete and damaged inventory. And then examine inventory record to identify slow moving items. So slow moving items ni memang you have to get to put attention during the inventory count. And examine the price at which finished goods have been sold after year end and review quantities of goods sold after year end to determine that inventory at year end has been or will be realized. Okay, dijual lah. If significant quantities of finished good inventory remain unsold for unusual time, unsold, tak jual-jual. Okay, after the end of financial, consider the need to make appropriate provision. Inilah provision ni, provision for unsold item. Provision for unsold item. So yang ini adalah estimation by the company. So how the company estimate? Dia bergantung kepada how they identify the slow moving, how they identify the damage, obsolete inventory. So you need to you need to check whether it is appropriate to make the provision or not. So katalah item tu tak jual 3 bulan je, lepas tu dia dah masukkan dalam provision. So you kena tengoklah what is the intention of the management. Okay, for work in progress, the ultimate selling price should be compared with the carrying value at the year end, and plus cost to be incurred after year end or the financial year to bring the work in progress to a finished good. So item work in progress, ini memang critical part lah, item work in progress ni dalam audit. Okay, so you just know how the test perform, okay, for the certain things lah. So it's not too difficult for the question, but it may be tested in MCQ. So this is the case study. Okay, what Joe Price do. Okay, Joe Price do the case study on the NRV. So they ascertain the selling price after year end. And the best way to do this is to find example of sales of the inventories and look at the sales price on the invoice. So as what we discussed just now, look at the sales price of the invoice. If the inventory item has not been sold, so what should they do? So she may look at the sales catalog to ascertain the price, but this may be an indication that the inventory is slow moving. So this is the indication of slow moving. Kalau item tu has not been sold, so and then indication for slow moving, obsolete, and should be written down. Okay, she should inspect the order book, order book to see if there is any order in progress for that inventory item. So kalau lah the inventory is indication have been indicate that is a slow moving item, so company should not have any order in their order book. Okay, so she will also carry out series of general tests by looking at the level of sales after year end to ensure inventories are being sold. Generally, looking at the specific item noted as damaged or obsolete at the inventory count and compare sales price to previous years to ensure they are not dropping unduly. So do the substantive analytical procedures. So what that's what Joe Price do. So this is how you compare the cost and NRV. Okay. So this is the total cost. This is the selling price. Okay. Not the okay, and then answer the following question. Note down any item from the schedule that might require investigation. So which one is require investigation? Okay, I quote 1, quote 2, 3, 4, 5, 6. Okay, quickly class, determine one item. Okay, class, which one you want to investigate?
Number 5.
Okay, number 5. Agree?
Yes.
Yes, okay. So look at to number 5. So why have you chosen this item? Why you have chosen this item? Anyone? Yasmin, why you chosen this item? Number 5 as the item to investigate.
Why I choose it?
Yes, why you choose?
Because the selling price is lower than the cost per unit.
Yes, good. Okay, so cuba tengok jawapan dia. Okay, so good. So dia kata the cost is greater than the net realizable value, and so the item need to be written down or inventory will be overstated in the statement of financial position. Okay, so what is the procedure? Okay, so this is a procedure. Okay, for a sample of inventory code, agree the selling price after year end to sales invoice and recalculate the unit price to ensure it is calculated correctly. So that's how you do with the item sell less than NRV. Okay, so soalan ni pun selalu keluar juga dalam MCQ So MCQ. So you should know that because the cost is greater, so what is the effect? It should be written down or not. Inventory will be overstated in the financial position. So that is the implication tu you kena tahu kenapa. And you should able to perform the test. And then compare the cost of inventory per unit to the selling price per unit to assess whether any inventory need to be written down or to net realizable value. So this what you identify tadi, yang you pilih number 5. Okay, good. What is the answer? What type of inventory might be valued at less than cost? And one answer je, I nak satu je. Kalau dapat, dah faham. What type of inventory might be valued at less than cost? Yasmin dah jawab tadi. Itu Yasmin. Mimi. Nak ambil sikit masa, awak cepat. Mimi?
Yes, madam.
What is the type of inventory might be valued at less than cost?
Yang NRV tu ke?
Less, yelah compare tadi NRV dengan cost tu. Apa type of inventory that might be valued at less than cost? Tu maksudnya dia ambil NRV lah. Apa jenis inventory dia?
Yang obsolete, yang slow moving tu.
Okay, good. Dah, betul. What are the work you carry out to find inventory that should be carried at NRV and confirm the value at which the inventory should be carried. So this is, you have the answer in the book, so you can find what is the test. Okay, so I think you can read by your own and this one. Okay, finish. Okay, next question class. Penat tak? Okay, I will share the exercise in the Google Classroom Exercise in the Google Classroom. Boleh? Kau nak tengok exercise? Ada kelas kan you all pukul 2 kan?
Ada.
Okay, so I put the exercise in the Google Classroom
Alright.
Okay, madam.
Pukul 11.59 dia akan tamat. Okay, class. So, so kita dismiss class. So, Fitri recite